On the phone line in Collingwood, Ontario, we have John. Good afternoon.
Mark, for taking my call.
You're welcome.
Just two notes. Mark, thank you very much. 2 years ago, you advised your viewers to go into U.S. dollars when the exchange rate was 103. I thank you for that.
That probably wasn't me, but thank you. Probably a guest.
No, it was you.
Oh, okay.
Your guest, though, was Peter, who wore a cow suit. And I see that David's not wearing his cow suit today. But Peter told everyone to go long BAC. And I thank you for that also. That did very well. I got out of it at 17. What I'm looking for now is a 2-year long hold. I know that sounds crazy, but 2 years. And I'm also looking at General Motors. I know with the stock going down because of the recall, increased the dividend. So I thought it was a good dividend play at close to 4% Canadian. And just want to know your opinion on that stock for the next 2 years going forward. I'll hang up and listen to your comments. Again, thank you both very much.
You're welcome.
Great.
Thanks a lot, John.
Well, John, the auto group is one that we like as a sector. We actually prefer the parts companies and the sub-assemblers more than the actual manufacturers themselves. And we'll talk about, I think, one coming up.
Yep.
But we talked about a number of those along the way. General Motors, I think, is one that you could take a look at. It certainly has consolidated over the last few months. Looks as though it's turning higher. I'm still not there technically on the stock. Certainly, you know, numbers that came out today were a little bit better. But when I look at that versus some of the parts companies that are trading relatively close to the highs with numbers that are getting quite a lot better, I prefer them. But I think that General Motors also plays into the theme, and I could buy the stock. It's just not a current holding.
One of your top picks today is a parts manufacturer, and we'll talk about one right now. Here's a call from Walter. He's in Brampton, Ontario. Hi, Walter.
Hi, guys. My call is on Magna. I'm getting a bit anxious. I bought this stock at $36, and it's getting pretty high now. Any opinions? I'll hang up and listen.
Tough to hang on, as you said earlier, isn't it?
Yeah. So Walter, don't be afraid of success.
Yeah.
Here's what I like about Magna. First of all, through the recession, they made some great purchases. There was a shakeout of a lot of the smaller parts suppliers. The ones with strong balance sheets, like Magna, were able to accumulate some good assets and garner more market share with each of their customers. Magna sells globally. They're doing a great job in North America. Europe has been a question mark for them for a while, but the numbers now are getting better in Europe as well. So they are growing their dollars per car. Geographically, their customers are doing well. They're really well diversified. But here's the thing. They have virtually no debt. And they have the ability to take on easily $2, $3, $4 billion worth of debt. And if they were to do that to make an acquisition, could probably grow their earnings by 25 or 30%. So they're underlevered. They could be more efficient with the capital and generate more earnings and more cash flow. But the other thing is, among all of those other good things, it trades at a significant discount to the group of parts companies, despite the fact that their metrics are excellent. So we think that Magna is a great holding in the group. We own Magna, we own Linamar, we own some other names, but this is one that I would continue to buy. I think that you shouldn't be afraid of holding on to this one. It, I think, continues to behave very well.
Nicely done, Walter. Great investment there for you. Well, let's talk to Harold. He's in Truro, Nova Scotia. Hi, Harold.
Thanks for taking my call. I'd like to know about Surge Energy, and if he would. I was going to buy Whitecap Resources, which I know is good, but if he was going to buy just one of them, which one would he pick? Thank you very much.
Well, I think that we would look at a Torque or a Whitecap first before a Surge. I think that Surge is a great company. They're growing nicely, but I think I prefer either a Torque or a Whitecap.
Anything else on this stock? Seems to be going sideways, kind of.
Yeah, we look for financial metrics that show it's improving relative to the peer group. We also look for relative price performance that confirms our view. One of the things we all have a tendency to do is find companies that look great to us on paper and buy them and say, well, the market will figure out that we're right. And we have a basic belief the market generally gets it right. So if you're in a bull market in a sector or a theme, you want to own the companies that are behaving the best, because clearly when it's a leadership group, all eyes are turned on the group. You don't want to buy the also-ran. I'm not saying Surge is an also-ran. I'm just saying there are companies that are behaving much better from a price perspective. Typically, the first stock to double in a long-term rally will be the first stock to double again. So I'd prefer a Whitecap or a Torque.
Next up is Ron. He is in Winnipeg. Good afternoon.
Hey guys, looking for your opinion on the U.S. industrial sector. Do you prefer GE or United Technologies at this time? Thank you.
Great question. So first of all, for an investor who's looking for exposure to the industrial sector, GE is a great investment. They've got a very diversified product line. They do big business in gas turbines, which we think is a big growth industry. And so, it will play in along with, growth in the economy. I think the only negative about GE is that over 50% of its revenues come from outside of the U.S., and the U.S. is the strongest economy in the world. So, the rest of the world is lagging a little bit. Certainly Asia is lagging a little bit. And so we've been more focused in companies that are more U.S.-centric. When we look at United Technologies, and we do have a holding in United Technologies, so I'm not saying I don't like GE, but I think I would choose United Technology over top. United Technologies has Otis Elevator, and there is some sign of significant improvement in commercial construction, and so they play into that theme. They also have environmental controls, and then they have Pratt & Whitney, which sells into the aerospace industry, and that's a theme we talked about earlier on. So I really like the exposures that they have at United Technologies, and about 60% of their revenues come from the U.S., which gets you more targeted in a strongest part of the world.
Any thought on GE trying to buy Alstom or at least the energy business for as much as $17 billion in France?
Look, it just tells you how strong these balance sheets are. We've been getting tremendous dividend growth, across the market. Last year, I think our income fund, 94% of our holdings gave us dividend growth of anywhere from 3 to 35%. Yet, the S&P 500 has more cash on the balance sheet of their consolidated balance sheets today than a year ago or 2 years ago. It's outrageous the amount of cash these companies are generating while returning it to the shareholders. So, you can see a lot of big deals take place because these companies are, in very, very good shape, and, this GE Alstom thing could be really interesting.
Right. GE's got $57 billion worth of cash, and they're looking to put some of it to work in that deal. Let's take a break, and we'll get back to questions for David after this.